Hello and welcome. My name is Sulie Richardson, and I am the Financial Wellness Senior Educator at Desert Financial Credit Union. And today we're going to be talking about the inside scoop to using credit cards wisely. So I want to share my screen with you so that you can see the content. You should be looking at the slide that says the inside scoop to using credit cards wisely. So credit cards have been around since the 1950s, a very long time. They are a very common payment tool that many of us use. There are advantages and there's also some disadvantages depending on how you use your card. And so today I'm going to share some information with you that can help you be in the right relationship with your credit card. So let's get started. So we're going to learn about identifying what your relationship is with your credit card. We're going to talk about fees and interest and how they are applied. We're going to share some very specific tips on how to help you manage your credit card. And then lastly, we are going to talk about how to get out of credit card debt. I am a big advocate of you don't always have to be in debt. All right, so before we get into the content, I want to share with you a video that speaks truth about us as a people and how we probably relate and use our credit cards. It's kind of funny and it's a few minutes, so let's get started with this video.
So tell me, Jen, what brings you into relationship counseling today?
My credit card?
Oh, you have quite the sense of humor.
No, I mean, this was my credit card's idea.
Hello.
Oh.
I just can't take it anymore. I'm at my limit, literally.
Oh my. Jen, the key to a successful partnership with your credit card is to pay it in full on time.
Pay it in full on time.
Pay it in full on time.
That's right. Your credit card's billing cycle is the period of time between billings. It can vary depending on the card issuer, so you must understand when it starts and when it ends for each credit card you use. During that time frame, purchases, credits, and any fees or finance charges are added and subtracted from your account. And when your billing cycle closes, you are billed for the remaining balance. This will be reflected in your credit card statement.
Which you would know if you ever opened one.
Shh. Your statement also shows your payment due date, which is usually about 20 days after your billing cycle ends. Your bill must be paid before the due date, in what's known as the grace period, in order to avoid late fees. And it must be paid in full to avoid being charged interest on the balance.
Make sure you allow extra time for your payment to process, too.
In the meantime, your next billing cycle will already be underway. It starts with whatever balance was left unpaid at the end of the previous billing cycle and goes from there, adding and subtracting your credit card activity for the current cycle.
What happens to our relationship if I can't pay off my balance?
I will make your life absolutely miserable.
What? What if we compromise and I pay the minimum payment? That's gotta count for something.
Well, making minimum payments on time may protect your credit rating and dodge the penalties related to missing a payment altogether. But you will be charged interest on the remainder of the balance.
And that interest accumulates quickly. If you only pay the minimum every month, I can keep you in debt for a really long time.
You wouldn't.
Oh, yes, I would. Start missing payments, and I'll tank your credit score. Raise your interest rates? Trust me, sister, you don't want to go there.
Okay, let's talk about strategies for managing this conflict. Jen, I want you to turn to your credit card and imagine it's cash. Treating your card like cash means using it to pay for things within your budget. Bills, groceries, all the regular things you know you can afford with the money you already have.
What's the point of having a credit card if I'm just gonna treat it like cash?
For the convenience, and depending on the specifics of your card, for the rewards.
What? I don't want you to think I'm using you just for your rewards.
Why not? I'm cool with it.
Really?
If you're paying in full and on time, it's perfectly fine to enjoy the perks of your credit card. So, how do you feel?
I feel recharged.
And I feel renewed interest.
What?
No!
Relax. Renewed interest in this relationship, not on my credit card balance.
Oh, well, in that case, I would say balance has been restored.
What
Why does everyone forget about me? I'm a really nice gift card. I've always been there for them.
So what do you think? Cute video, right? What is your relationship with your credit card? So I want to share with you some statistics here. So in 2021, Americans carried an average balance on their credit cards of how much? How much do you think that we carried on our credit cards in 2021? Let me show you. $5,525. So this was done from a study conducted by Experian. Credit cards, when we use them, and a lot of people just don't think about it, it's actually a mini loan. A mini loan, and it can lead to some serious debt. And so imagine, you got $5,225, and you're just making that minimum payment. So we're going to talk a little bit more about how to pay down our credit card in just a little bit. So what is your relationship with your credit card? Here are 5 reasons on why people use credit card. The first one is convenience. It's flexible, right? You get to make purchases maybe on big ticket items. Maybe you don't have the money right now, but there's a great sale and you want to make sure to take advantage of that. That's one reason. Number 2, delayed payment helps with those unexpected emergencies. If you don't have the money in your checking account and you have a flat tire or medical emergency, you can put it on your credit card. In our budgeting classes, we always promote pay yourself first, put some money in a savings account for an emergency. It is not a matter of if something's going to happen, it's a matter of when, and then you're going to be ready. Number 3, the credit score. Having a credit card can help you improve your credit score depending on how you manage it. Number 4, cash advance. Some cards, well, many cards, probably all of the credit cards, will allow you to actually get cash from your credit line, because sometimes people need to have the green stuff. They need to have the money in their hands to do something with. Number 5, rewards. There are cards that will allow you to earn points and get discounts on travel and incentives and even cash back. So what is your relationship with your credit card? When you can identify what your relationship with your credit card is, it's going to help you understand your habits and your behaviors and why you do what you do with your card. So something to think about, right? What is your relationship with your credit card? So the fees and the interest, how do they apply? This is an example from a legitimate credit card company where I actually took it off the statement verbatim, just to kind of show and talk a little bit about how these fees apply. With this particular card, the rate is 15.99% on purchases. When I see 15.99%, I see 16%. It's a marketing thing that they do when they always want to put the 0.99 and, just round up, round up. The balance transfer interest rate is, again, 15.99%, 16%. So if I make a balance transfer, they're going to charge me that 15.99%. And then they also probably going to charge me a fee, because a lot of cards do that. Then there's a cash advance opportunity here where I can take this card, go into a financial institution or to an ATM and put it in and get some cash. The rate is 24.99%. 25%. That's a very expensive loan. When I get a cash advance, I'm going to start to accrue interest immediately. So you don't get that grace period. Interest accrues immediately on cash advance. And then also a lot of times they're going to charge me a fee for this, for getting that cash advance. On your note and disclosure, or they might have given you a fee schedule, or you can request one. It will give you a breakdown on all the potential fees that your credit card lender could apply to your card. And so now we're talking about the annual membership fee, which some cards do charge. And a particular card that I'm thinking about that is a rewards card, the fee per year to have this card is $99. So it's $100. So when you're looking at membership fees, you want to make sure that if you're getting rewards and perks and discounts, that the fees make sense. Like you're going to really recruit that in the rewards and in the discounts that you're going to receive. So make sure to do the math on that. If I'm late with this card, if you're late, the fees can be as high as $40. And if I'm late, they have the ability, according to the disclosure, that they're going to now up my rate from the 15.99% to possibly 29.99%, 30% interest rate on a credit card. That again is a very, very expensive loan. And if I am making a purchase online in a foreign country or from abroad, and they have to convert, the US dollars, they're going to charge me 3%. Okay, so that's 3% of the US dollar amount that they can charge on that. The balance transfer promotion. A lot of times we get mailers all the time that really promote that they'll transfer your balance. Interest usually accrues the day that you activate that balance transfer. So again, you don't usually get that grace period. And what I really want to mention about this is that also when you get that initial disclosure, that's when they tell you when those introductory rates or that balance transfer, as it relates to the 0% introductory rate. When you get that initial offer, that's when it's going to usually tell you when it expires and the 0 introductory rate ends. Normally, they're not going to send you another letter to tell you that, by the way, your rate's going to go up in a month. It's usually in that initial disclosure. So it's up to us as consumers to make sure that we remember. And of course, we're not going to remember. So use your calendar to set up a reminder, some kind of alert, so that you will be prompted to know when your 0% introductory rate is going to expire, because they're not going to give you a courtesy letter of reminder before that takes place. So there's two ways or two strategies that you could use to pay off your credit cards and get out of debt. The first one is the avalanche method. The avalanche method starts with a card that has the highest annual percentage rate. So you're going to pay the minimum on all of your cards, but you're going to pay extra on that one card that you have identified with the highest annual percentage rate. So you, on that due date, you pay the payment and then also pay that extra. Because when you make payments, guess who gets paid first? The lender. So the lender is going to take that extra payment. They're going to take what you owe them first. So interest gets paid first. Anything left over goes toward the principal. So take your extra payment, apply it on that same day, and it should go toward the principal, because you want to pay down the principal. And the next method that you're going to use is the snowball method. So you're going to take the card that has the smallest dollar amount. You're going to pay extra on that card, pay the minimum on all your other cards, and until you get all your cards paid off. So once you get through paying off one card, you take that payment plus that extra that you've been paying and then apply it to the next card. So regardless of what method that you choose, you just want to always pay extra and pay it on the due date. And so when you're done paying off that one card, here's what you could do to keep your momentum. Give yourself a treat. Give yourself a treat, something that you don't have to charge on your credit card. And then one of the reasons that people usually will pick the snowball method is because if you have a lot of credit card debt and your card, let's say, is at $5,000 credit limit, it's very hard to get motivated to tackle that. And that's why people sometimes will start with the card with the smallest limit, 500, 1,000, because once you get that one card paid off, you get momentum, and then you can go on to the next card. Regardless of what method you choose, the ideal is to pay extra and pay it on the due date so that we can get out of credit card debt. So this example shows how when you pay just the minimum, how long it takes you to pay that off. This is a card that has the 15.99% rate. The card balance is $2,514.30. If I only pay the minimum payment of $40, it's going to take me 9 years to pay this card off. And I would have paid total $4,478. If I paid $89 more than the minimum, it would take me 3 years to pay it off for a total payments of $3,186 for a savings of, ta-da, $1,292. So almost $1,300. This is a big savings that I would love to take advantage of. So keep in mind, pay more than the minimum. So when we have credit cards, a lot of times it does kind of enable people to overspend. So here's some do's and don'ts. First thing that you want to do is to remember your credit card transactions are like mini loans. They're mini loans, regardless of whether you're getting gas, buying groceries, buying a new TV, getting, new furniture. It is a mini loan. Keeping that in mind helps you to remember to try to pay off those balances. Pay for things within your regular budget. So you don't want to use your credit card just because you have one. If you use your credit card, make sure you have the money in your checking account that you can pay it off, and decrease your reliance on credit cards by saving for an emergency. And I know I said this already, but remember that it's not a matter of if something's going to happen, but it is a matter of when. So you want to decrease your reliance on credit cards by building up your own emergency savings account for when you have your own emergencies. And then some of the don'ts, don't put in your credit card is access to extra income. Sometimes people, when they don't have the money and there's something they feel that they want to do, they'll say, well, oh, I've got this credit card though that I can use. That's not the mindset that we want to have. Forget that you even have that credit card. Don't use your credit cards to justify extravagant purchases. I got this credit card so I can go out and not get the latest phone. You don't want to do that because remember, it is a mini loan. Then the last bullet says, don't postpone saving money just because you have access to a credit card. Some people look at their credit cards as a security blanket, that's my savings. No, your credit card is not your savings. Your credit card is like having a mini loan. Pay yourself first and start putting money into your savings account. Even while you're paying off your credit, put a little bit always aside in a savings account. So here's some tips to help you to manage your credit card successfully. You can set up alerts. Set up alerts with certain types of transactions or for certain kinds of transactions. You can set up alerts for your spending limit. So if I want to make sure that I keep my spending under control, I can set up an alert that if my card is swiped for transactions in excess of $500, the credit card company is going to send me an alert. I need to have that because it keeps me on my toes to make sure that I don't overspend. You can set up alert for due dates. You can set up alert for typing for certain types of transactions. Do whatever it is that you need to do to help you to manage your credit cards. And I find that setting up alerts for transactions and calendar alerts help me to stay on track and help me to reduce spending unnecessarily because those alerts are reminders. And then if you have a card that you're using for rewards, and so if you have a credit card that has points, if you're like me, you're swiping it for every single transaction. That means that you're going to have to be very diligent in making sure that you have that money, those funds in your checking account, or what I do is transfer especially some of the big ticket items, into a special account for my Visa card so that when my credit card payment is due, the money is there. It is easy when you're swiping and swiping for all of your transaction to kind of overspend. And so by having some extra money, putting that money into your savings account, it'll help you when your payment is due, that you have the funds to pay off your card. And then the last bullet says to keep credit card spending to less than 30% of your credit limit. Your credit card and any kind of loans that you have out there impacts your credit score. So let's say that you have a credit card and you've got a $1,000 credit line. You don't want to charge up more than 30%. So you don't want to have more than $300 charge up on your card if you don't have to, because it could negatively impact your credit score. 30% of what makes up your credit score is your credit utilization. So depending on where you are in your credit life and what you're trying to accomplish, that could impact you in a negative way. So part of the loan approval process that lenders use is also looking at what's called your debt to income ratio. So this illustration shows where they look at your monthly debt payment. They're going to take that and then they're going to divide it by your gross monthly income. And then it's going to give them a percentage. That percentage is considered your debt to income ratio. And so lenders use that to help them make a decision on whether or not to approve your loan application. So you can do this calculation for yourself to see kind of where you are with your debt to income ratio. Some lenders suggest that the amount should not exceed 36%. And if you are a renter, your percentage is probably going to be a little bit less. I've seen where it says it should be, 20% or less. So there's a different calculation for if you are a homeowner or if you are a renter. But make sure to check with your lender for whatever their guidelines are, because each lender has their own rules of what is an acceptable level of debt. So check with your lender to find out what theirs are. Okay, so this last screen just shows you some resources that is available to us consumers, that if we need to have, or get someone to kind of help us with credit counseling, there are nonprofit organizations out there that can help you with that. There's also the Consumer Financial Protection Bureau. This is a government agency that was established probably about, I want to say 15 years ago or so, to help consumers. If you have loans with if you have problems with financial products, they're here for us as a resource. And then lastly, we've got the FTC, another government agency, is the Federal Trade Commission, and that their job is to help protect consumers from unfair and deceptive practices in the marketplace. So we have some resources that are available to help us. That's pretty much credible. So that concludes this webinar, and I hope that the information was helpful to you and that you find valuable, and that if you are in credit card debt, that you're going to start to work your way out of that so that you can be in a right relationship with your credit cards and also with your finances. All right, thank you so much and have a great day.